Are we heading for a market crash or a 2026 boom? If you've been doom scrolling headlines wondering if a wave of foreclosures is coming to sweep up Orange County, I have some numbers today that are going to stop you in your tracks. We are entering a brand new phase of the housing market, one that looks very different from the last 2 years. And if you are still waiting for 2021 mortgage rates to return, you might be missing the healthiest market stability we've seen in a long time. I'm Leslie Swan with the Swan Team Real Estate, your Orange County real estate expert. My job is to cut through the noise and give you the raw data so you can make the best decisions for your family and your wealth. Before we dive into the numbers, do me a huge favor. Hit that like button, please subscribe, and drop a comment below. Let me know, are you team buy, team sell, or team what's going to happen in 2026? I want to hear from you. So let's start with the elephant in the room, mortgage rates. We need a collective mindset shift here, people. For the past few months, rates have been drifting between 6 and 6.5%. For the most part, closer to 6%. I know, some of you are still holding on to memories of 2 or 3% rates, but we have to get those numbers out of our heads. Those were historic anomalies. They were not normal. They were brought on by a worldwide pandemic. What is exciting is stability. Now, I know stability isn't an incredibly exciting word, but when thinking about spending what is currently the most money you have ever spent in your life, do you want erratic or stable rates? I thought so. And compare where we are right now to last December. This time last year, rates were sitting closer to 7%. We're entering 26 in a much more neutral, normal range in the low 6% range. This stability is the foundation we need for a healthy market. So realize that normal is actually a great place to be. And if rates ever go lower, you always have the opportunity to refinance. Purchase applications have been steadily going up, which signals buyers are getting ready. Now, let's look at the health of the Orange County market right now. First, inventory. As is tradition for the holidays, we are seeing a drop. Inventory plunged by 7% in the past 2 weeks, sitting at 3,629 homes. That is the lowest level we've seen since March. But here's the context. Last year at this time, we only had about 3,000 homes on the market. So buyers, you actually have significantly more options today than you did a year ago. And inventory is actually up 37% compared to the 3-year average before COVID. Now let's look at demand. It has taken a seasonal dip, down 11% in the last 2 weeks to 1,247 pending sales, which is also the largest drop in the year as people begin to start focusing on holiday shopping rather than home shopping. So what does that mean for the speed of the market? Well, we measure speed by expected market time. Right now, the overall Orange County market is at 87 days expected market time. Compare that to last year, and it was 70 days. The market is slightly slower and more deliberate than it was a year ago, giving buyers a little more breathing room. There is one specific trend you need to know about this month, and it involves attached homes, or as we commonly refer to them, condos. Historically, condos are the entry point for home buyers, but right now, condos are actually taking longer to sell than detached homes. Detached homes have an average market time of 82 days, while condos and townhomes have an average market time of 95 days. That is nearly 2 weeks more. Why? It's the cost. HOA fees have skyrocketed due to insurance premiums, regulations, and reserve issues. The median HOA fee for a condo sold in November was $502 a month, and buyers are definitely feeling that pinch. Now, I promised I would address the rumors of a crash. I hear people saying, wait for the foreclosures. Folks, let me be very clear. There is no wave of short sales or foreclosures coming. In all of Orange County, which is a county of 3 million people, do you know how many distressed homes there are on the active market right now? 4. Just 4 homes. That is essentially zero. It represents only 0.1% of all listings. And to put that in perspective, 99.7% of all sellers in Orange County have equity. Compare Orange County's 4 distressed homes to Los Angeles County, which has 125, or Riverside, which has 144. Orange County is incredibly insulated and stable, so please do not bet your financial future on a crash that the data simply just does not support. Now let's zoom in on some local neighborhoods to see what's happening on the ground. My hometown, Mission Viejo, remains competitive. The market time here is roughly 68 days, with a median active list price of roughly $1.16 million. It remains a hotspot for families. Just down the road, Laguna Niguel is sitting at a 92-day market time with a median list price just under $1.5 million. Heading over to the coast, Dana Point is seeing a market time of roughly 107 days. Prices jump here with a median list price of roughly $2.8 million. Now let's look at Irvine. Usually it's a speed demon, but Irvine has slowed down to a 136-day market time with inventory at 525 active listings. This is actually unusual for Irvine and gives buyers more leverage than we usually see there. And in the luxury tier, Newport Beach is sitting at 193 days on the market. The median list price, a cool $4.7 million. Luxury takes patience. Finally, how do we stack up against the rest of the West? Well, Orange County is actually outperforming most areas. Our overall market time is 87 days. LA County is slower at 122 days. Riverside is at 126 days. San Bernardino is at 127 days. And Las Vegas, they're sitting at a mind-blowing 159 days. Now, keep in mind that when it takes between 90 and 120 days, it's considered a neutral market, which means it doesn't necessarily favor the seller or the buyer. But when you cross over 120 days on market, that market is officially a buyer's market. So if you're looking to buy in the greater Las Vegas area right now, now's the time. And the greater Phoenix area is at 112 days, which means it's in a neutral market. The only neighbor moving almost as fast as us is the Bay Area at 78 days. This tells us that the demand for Orange County coastal living remains incredibly resilient compared to the inland and desert markets. So here is the bottom line. The market is stable. Distressed sales are non-existent, and we're entering 2026 with rates that are normalizing. If you're thinking about selling in 26, now is the time to start planning. You don't want to wait until the spring rush when basically everyone else has already sold their house and there are no more buyers. You need to start strategizing and figuring out your timing now. I'm Leslie Swan. If you're ready to make a move or just want to know what your home is worth in this new market, call me directly at 949-444-1601. Thank you so much for watching, and don't forget to like and subscribe, and I will see you in the new year.